Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the E-mini, and what we're seeing, what we saw Friday, and what we're seeing today. I'm going to knock this in one. Is we're seeing a battle now over the 200-day exponential moving average. We talked about that late last week. If the 100-day, which was resistance, was converted to support, then the next issue was going to be, what does the 200-day exponential moving average want to be? On my stuff, the 200-day exponential moving average is the ultimate delineator on a longer-term scale about who controls the tape. If the bears are going to put a stop to this, it needs to be here. It needs to be at the 200-day, and that would be a signal to the longer-term folks that, look, okay, we've been down to 1800 a couple of times. Yeah, there's a double bottom down there. We went up to test the 200-day, which is important. But in order for that to play out, you've got to see now this week, you need to see the 200-day exponential moving average seal as resistance. You need to start taking out these areas here. 100-day, 9-day simple, 50-day, middle band. These areas need to start to go if the bears are going to reassert themselves. I'm headed into this week with a very open mind. We overshot up to 2007, and they closed it right on the 200-day, which is something that we talked about in the room, and we caught a really nice short from 05 back down, right back down into 94. They popped it up a little bit, and they closed it dead bang on the 200-day going into a new week, which the market, I've seen that many times before. The mini loves doing stuff like that. It confuses the maximum number of people headed into a Sunday night and into a Monday. So again, going into this week with an open mind, what we saw in the overnight. Here's a 5-minute chart of the mini from last night. Here you have the 200-day exponential moving average. Daily pivots here 90, so 94, 95. Resistance, 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 resistance. Do we detect a pattern developing here? The first order of business, if you are a bull, is you've got to get over this area. You've got to get through 94, 95 with authority and convert it to support. If you're the bears, you got to hold the line. You got to hold this line right here. You hold this line, you start converting other areas to resistance, then you can start stair-stepping down for the remainder of the week, okay? But, as far as us in the room, it's playing out exactly as we had expected. 94 is extremely important. You can see what I was talking about a minute ago, how they closed it right on it, okay? It was either going to start to become consistent support or consistent resistance. It can all change once we get into the regular session. We haven't traded a minute of regular session trading this week, obviously. But as we get into Monday, into Tuesday, we've got to see, what does the 200 want to be? And then you start to look at areas below. You start to look at you start to look at the weekly pivot. You got a weekly pivot down here in the 74 area. If we break down, if it's a breakdown and a simple test of the weekly pivot, then ultimately that puts the ball right back in the bull's court to succeed. If you see the weekly pivot break down and convert, then you can see the bears begin to extend some things. So that's, that it's all about the 200-day exponential moving average this week. Okay, that's all I got. Everybody have a great day. So follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another video. Trading well, everybody.